Good morning and welcome all to Ignitis Group first half year 2021 earnings call. I'm Aine Rifil-Grinkevičienė and today I will host this call. Together with us we also have Group CEO Darius Maikštėnas, CFO Darius Kašauskas, and Head of Corporate Finance Jonas Rimavičius. Our management firstly will introduce you with the most recent business highlights, then financial results and full year outlook for 2021. Afterwards, we will have questions and answer sessions. Please, I encourage you to participate. You can send your questions on your screen or just dial in on the line. So thank you, and Darius Maikštėnas, please begin.
Thank you, Aine. Good morning. Second quarter of 2021 was another great quarter for Ignitis Group. Therefore, we finished first half of this year with very strong financial and operational results. EBITDA growth was 30.5%, up to 168.4 million euros in adjusted EBITDA. The growth mainly was driven by new capacities of green generation. Also, we had some temporarily positive results on network segment due to increased volumes. Those effects will level out until end of the year. Also, better results in customers and solutions. Therefore, we reiterate our guidance for 2021 to reach adjusted EBITDA to 310 million euros. Also, we are continuing our commitment to our shareholders on returns. We are aiming to distribute dividends for the first half of this year, subject for EGM approval, amount of dividends of 43.75 million euros. And we are continuing maintain a very robust financial position with our BBB+ stable outlook rating from S&P. Strategy-wise, we are continuing build our new project portfolio. This time we have a significant event of entering renewables market of Latvia by adding 3 new early stage development projects of wind in Latvia with total amount of 160 megawatts. We have some deviations on the developments in Pomerania and Polish solar portfolio 1, but overall all the rest projects are in line with expectations. On sustainability and governance, we are continuously progressing on climate action. We are streamlining our activities on social and governance, and therefore we're getting recognition. We're very proud to see that our goal to improve our ESG rating with MSCI by 2024 already reached, and we already received the rating of AA, which puts us among the leaders in this industry and significantly above utility group average, which is BBB. Few more words about networks. Adjusted EBITDA growth was 13.4% higher comparing to the year before. As I said, it was impacted by 2 factors. One is the higher RAB value due to investments, and also some effect of higher volumes, which is to be level out by the end of the year. We had higher capex investments. A majority of those were dedicated to resilience and improvement to the networks and maintenance. We also had some rescheduling of smart metering project. Contract with main contractor and supplier is already signed. And we made some adjustments to the project schedule to improve security and reliability of entire system and to comply with the highest standards of cybersecurity, and also to have reasonable costs for customers and the network while implementing those 1.2 million smart meters. Therefore, the project will last until 2025. Having said so, I should notice that already in 2023, about 80% of all electricity distributed in Lithuania will be measured and accounted already via installed smart meters. On the green generation, we have significant growth in EBITDA, which is driven by increased capacities and the launch of Kaunas and Vilnius CHP units, waste energy units. So total capacity increased by 43 megawatts, while investments, if to compare first half of 2021 to 2020, is significantly lower due to the fact that we already finished the largest projects of construction of both Kaunas and Vilnius waste energy units, as well as Pomerania. Looking further to the pipeline, we are progressing quite well according to our expectations to reach 1.82 gigawatts by 2024 and 4 gigawatts by 2030. New addition of early stage wind farms in Latvia, adding to the pipeline. While on Pomerania, due to the typical development project risks, we are experiencing about 6 months delay of COD, and that will happen in Q3 versus that was expected in Q1. The park is already constructed and producing electricity. Just the final COD date and issuing of the license is expected to be later. In Polish solar portfolio 1, we are initiating negotiations with the developer to make some adjustments to our agreement due to the fact that during the last CFD auctions, no tariffs was acquired. So we are initiating negotiations to update the bidding strategy and the pricing of the projects. All the rest of developments, Kruonis CHP, Kruonis fifth block, preparation for offshore wind development and others, and Mažeikiai wind park development are well on track as expected. Few more words about flexible generation. Here we see also a growth of 20.8% of adjusted EBITDA comparing to the first half of last year. That was impacted due to the higher clean spark spread in the market. So good results for flexible generation in this part of the year as well. On the customers and solutions, we also have a growth. That was mainly driven by our gas activities, and in particular also quite significant impact is from revaluation of gas inventories. Also on the customers and solutions, we are progressing very well on a liberalization project while maintaining strong leadership position in the B2C segment overall and as independent supplier. With that, I would pass the floor to Darius Kašauskas, our CFO, to talk more about financials.
Thank you, Thank you, Darius. I'm pleased to present financial highlights of Ignitis Group. As Darius already mentioned, we progressed well in H1 2021, which is reflected in our financial results also. In terms of adjusted EBITDA, we delivered more than 30% growth, reaching 168 million euros, mostly as a result of, first of all, our developments in green generation segment with the launch of Kaunas CHP and Vilnius CHP's waste-to-energy unit, and better results from Kaunas hydropower plant. On top of that, growth was also driven by favorable changes in gas market prices in the customer solution business segment, better results of commercial activities of a CCGT unit in flexible generation, and higher distributed volume effect in networks, which will level off during the year. As a result of higher adjusted EBITDA, our adjusted net profit number was also attractive, recorded more than 40% growth, driven by higher adjusted EBITDA. Reported net profit decreased by 32%, mainly driven by Kaunas CHP option fair value decrease, which is in essence one-off and non-cash item related to accounting matters. Breaking down our adjusted EBITDA, we can see what green generation and networks we are the largest contributors to overall adjusted EBITDA level. Specifically, green generation contributed 14 million euros, and networks added another 13 million euros. Meanwhile, flexible generation was the smallest contributor to the EBITDA. Turning to returns, our adjusted return on capital employed number was higher in H1 2021 compared to the same period last year. The increase compared to H1 2020 was mainly driven by increase in adjusted EBITDA of last 12 months. Looking at the right side, our adjusted ROE has also increased by 1.2 percentage point to 8.3%. Our investments in H1 2021 decreased by 59% so compared to last year, as major projects were near completion or already completed. Meanwhile, our portfolio of new investments projects is in a stage where CapEx is still less intense. Additionally, for Vilnius CHP biomass unit, the majority of investments are starting in H2 of this year. Investments in network segments grew by 7.9 million euros compared to the last year as a result of maintenance of CapEx of electricity distribution network. As for our free cash flow and net debt metrics, we showcase solid performance in H1 2021 as well. Specifically, our free cash flow increased by almost 300% as a result of lower investments and higher EBITDA. Meanwhile, our net debt decreased by 4.8% due to positive free cash flow and partly offset by paid dividends for the second half of 2020. Finally, looking at the net debt bridge, higher FFO was our largest driver of net debt reduction in H1 2021 and overall improved our leverage metrics. Thus, our net debt to adjusted EBITDA ratio decreased from 2.1 times to 1.7 times, and FFO to net debt ratio increased from 52% to almost 56%. With this, I will give back floor to Darius Maikštėnas to conclude presentation.
Thank you, Darius. So this strong financial performance led us to continue with our guidance for 2021. We maintain our guidance to reach adjusted EBITDA by the end of the year, 4.0 of 310 from 300 to 310. Main drivers of this growth and those results are, as I said before, good results and capacity increases in green generation, as well as growth in network segment. So summarizing key takeaways, key messages about our results. Adjusted EBITDA growth driven by green generation. We are maintaining outlook of 300 to 310 euros of adjusted EBITDA for this year. In line with dividend policy, we intend to pay 43.75 million euros in dividends for the first half of the year. We entered Latvian renewables market with new project portfolio, wind portfolio of 160 megawatts, and we are progressing further in our ESG position with upgrade of MCSI ESG risk rating from A to AA. So we are continuing to execute our strategy of creating sustainable future without coal, nuclear, and reaching net zero. Thank you.
So thank you for the presentation, and we are open now for your questions. Currently, we have only one question, so I really encourage you to send those in. So the first question is with regards to Pomerania wind farm. It's in Lithuanian, so I will try to translate it. Pomerania wind farm is not yet reached COD, but the turbines are operating. Does it operate at a full scale? And what price receives Pomerania for electricity generated? How it will change after that?
Thank you. Aine, Jonas will answer about Pomerania financials.
Yeah. So in terms of Pomerania, so you are right. The wind farm is fully constructed. All the turbines are connected to the grid, and all of them are generating electricity. This electricity is being sold to the market. However, in terms of revenue recognition, they are not yet recognized, but are being accrued on the balance sheet. So when the official COD is reached, those revenues will be transferred to P&L. In terms of the price level, so currently the generated electricity is being sold at the market prices, and after the COD, the tariff will be received. Currently, the market prices are actually even higher than the tariff, so effectively we are earning a premium on that.
We have one question on the line.
Thank you. Ladies and gentlemen, if you wish to register for a question, you can always press star 1 on your telephone keypad. We have one question coming from the telephone, and it comes from the line of Igor Kazmin from Morgan Stanley. Please go ahead.
Good morning. Thank you. Would like to maybe just understand a little bit better the situation with the Polish auctions and the project with the Sun Group. So I think if I understand correctly, so you are trying to renegotiate the terms of the project. Could you elaborate a little bit? What does this mean? And maybe what was the reasons why the project was not sort of selected as part of the auctions, and whether there is still a probability that there is still a chance that the projects will be selected in future auctions, and if not, do you think that the project will still go ahead on a merchant basis? Just want to understand the situation a little bit more. Thank you.
Yeah. So in terms of adding a bit more detail on renegotiations process, why the projects did not win in the last auction? So the reason is quite straightforward. The bidding level was too high, and we see them economical even at the lower levels. So that's why we opened up the renegotiations process with a developer in order to see what can be done in terms of amending the bidding strategy and some other conditions in order to ensure the maximum success of this project. In short, we still think that these projects can be successful, but in order to do that, bidding strategy has to be changed. And so if we are successful in renegotiating, these projects are likely to go forward. If we are not successful, then the worst case scenario, we shake hands with the developer and go in different directions.
Another question coming from the line of Anna Antonova from JP Morgan. Please go ahead.
Good morning. Thank you for the presentation. Quick question on our side relating to investments for this year. We've seen that in green generation segment in the first half of this year, investments totaled just 14 million euros. You commented that there were some project rescheduling and some other factors affecting the spend. How should we think about second half of this year in terms of investments in green generation, but also in networks segment? Should we expect to see in the second half of this year relatively similar levels of investments compared to the first half of this year, or we may see some accelerated spend? Thank you.
Yeah. So I will take this one as well. So in terms of the overall level of investments, we do expect to see a pickup in the second half of the year. However, the decline in green generation part is kind of a natural slowdown, because Pomerania, Vilnius CHP, waste to energy unit, Kaunas CHP, those kind of those investments were completed, and several of our projects are still in the earlier phase, which means that the majority of capex will be falling partly in the second half, but mainly in the 2022 or even in 2023. So in short, we expect to see some pickup in the second half. However, it won't be a major pickup, so to say.
And on the network side, investments, we expect to have continuous growth of investment level, the capex spendings on the networks. So you can expect a bit more of growth here as well.
Understood. Thank you very much.
Once again, ladies and gentlemen, if you need to register for questions on the telephone, you can always press star followed by 1 on your telephone keypad. Our next question from the line of Ekaterina Smyk from Bank of America. Please go ahead with your question.
Yes, good afternoon. I actually have submitted the questions, via the online form, but I will still ask them. So, I mean, I have three questions. The first one is on your guidance for 2021, which remained unchanged, right? And, the expected adjusted EBITDA growth of 3 to 6% compares to over 30% delivered in the first half. I mean, obviously, you do expect a decline in the second half. So I just wanted, to understand where this decline will mainly come from. The second question is on the capex for the smart metering program in network segment. So how this one changes because of the expected delay in completion, to 2025 versus 2023 expected previously. So does the total amount change, and if no, how this capex should be distributed across years? And the third question is on the Vilnius biomass unit, the one that was delayed. What is the status of that one? When do you expect to see the completion of the project? And have you been able to find, the developer post, the issues with the previous one? Thank you.
Thank you. So I will start from the last question about Vilnius biomass unit. So it's going according to the schedule of rescheduled plan, and we are planning to launch it by the end of next year. On the guidance, there are mainly two effects taken into account why we are still keeping a level of conservatism in our guidance. First, I mentioned that the growth which was driven on the networks segment by the volume increase has to level out by the end of the year. The second one, which has some level of uncertainty, is related to results of customers and solutions of re-evaluation of inventory of gas assets. So therefore, we keep this guidance unchanged. And the first question, according to the smart metering program, amount of smart meters and level of capex remains unchanged. Just the start of the actual rollout is starting a little bit later due to the requirements related to cyber security issues. So overall, the capex will be deployed during second half of 2022 down to end of 2025 in a more or less linear manner.
Understood. Thank you. And just following up on the guidance question, what is the the rough impact of the higher volumes in network segment, the one that you expect can be leveled out in the second half?
Yes, it's around 10 million euros in that range.
Understood. Thank you so much.
We have a follow-up back question coming from the line of Igor Kuzmin from Morgan Stanley. Please go ahead, sir.
Thank you. I just wanted to stay on this topic with the network segment adjustments in the forthcoming period for the extra profits that are being generated in the first half of this year due to higher demand. So if there is if I understand you correctly, so some of the readjustment could happen in the second half of this year. Could there be some readjustments spilling over into 2022? And if yes, then by how much roughly? Thank you.
Yeah. So in terms of the adjusted EBITDA, we will show the fully adjusted and full impact will be shown this year. In terms of the reported EBITDA, some of it might fall over to the next year. But in the annual numbers, in the adjusted EBITDA, you will see the fully eliminated volume impact.
So the total cumulative, sorry, just to make sure I understand, but the total cumulative effect is still 10 million euros, right?
So currently, right, so because we only know the volumes for the first half of the year, right? So that impact is 10 million. So this will be eliminated. What we will have in the second half, it's still unknown. Maybe we will catch up naturally, so there will be no falling over to the next year, and maybe it will increase even further. So the second half is still unknown. In any case, you remember that the networks business is effectively RAB times WACC plus depreciation. So that is fixed. Yes,
perfect. Thank you. And is there any chance that the parameters which have been released, well, you put it in, sorry, just one follow-up from me, which has been there is a press release from Ignitis Group on the 3rd of August with the new WACC parameters starting 2022. Is there any chance that these parameters may change still into the year end, or this is pretty much final?
No, this is fixed. The WACC level is fixed for the next year.
Great. Thank you. That's all from me.
We have no further questions on the telephone. Please continue.
Thank you very much for the questions and answers. We have a few more questions received in written from the audience. So the first one is, could you please explain a bit in more detail the 23.5 million euro option fair value decrease in Kaunas HP? Thanks.
Can you elaborate a little bit more about mechanics?
Sure. So so the way this is a very it is an accounting thing. So we have an option, right? So there is in the shareholders agreement there is a clause for the deadlock situations, right? So when the two shareholders cannot agree, there is a put option granted to our minority partner, and we have a call option on the other side. And due to the accounting rules, we have to account for that put option. And the mechanics previously was that the value of the put option is based on the book value of the investment. Now, after the COD of Kaunas HP, this has transitioned to the market value of Kaunas HP. And since the market value is higher than the book value, this effectively means that the value of the put option also increases. And since it's a put option and from the accounting perspective, a liability from our side, it is the value of that put option increased, and the P&L impact of that was a negative 23 million impact.
Thank you, Jonas. We have one more question. The adjusted EBITDA guidance looks quite conservative given the H1 performance. Shall we regard this as a conservatism, or do you see a real slowdown in H2? Do you have procedures for when guidance will be changed, perhaps a percentage threshold?
So overall, we already talked about this topic. So at this point of time, we are maintaining our guidance for 2021.
Thank you, Darius. The next question is, regarding electricity market liberalization stage 2 and stage 3 in progress, how you evaluate current progress results for Ignitis? How market share for Ignitis will change after liberalization?
So we really are happy about on our results of the first stage. We are maintaining a very strong market leadership position due to very strong brand and very strong value proposition to our customer base. And we are expecting to continue in similar pace during stage 2 and stage 3.
Thank you, Darius. Our next question is, hi, How much are you planning to spend on CapEx in 2021? And could you also give an update to the 2021-2024 period CapEx plan, if there are any changes?
Yeah, so in terms of 2021, we are not providing a guidance, but as I mentioned previously, we expect some pickup compared to the H1 numbers. In terms of 2021-2024 CapEx plan, we see no changes in that. The decline in green generation CapEx is a temporary one, and these investments will pass through to the next years. So effectively, we keep the guidance for 21-24 overall CapEx level.
Thank you, Jonas. One more question. At what stage now is own share buyback process? In EGM's proposal, you calculate the dividends per share with and without buyback. Does that mean the probability of buyback to be done before dividends ex-date is rather high?
That means that both options are possible, and at the current stage, we are providing all the information that is relevant.
Thank you, Darius, for answering. One more question. After the liberalization stage is done in Lithuania, what are plans to mitigate electricity purchase price increase in the Nord Pool, as these costs won't be covered by governmental surcharge system as it is now?
So, in similar way how we deal with B2B segment, we are hedging our portfolio on the market, and in parallel, we are growing our own green generation asset base, which helps us also to mitigate volume and price fluctuations in the market.
We have further 2 questions. What is the latest situation with the stabilization shares? How many shares are still held?
Yeah, so there is no change regarding that. As of now, all the stabilization shares are held by the stabilization agent, so the nominal value of these is around 45 million euros.
Thank you, Jonas. And the last question so far. Regarding smart meters project, CapEx will remain the same. Are there any legal secured steps done with provider to cap price of smart meters themselves services? What extra OPEX costs are planned to this project due to the delay? Could you please share at least range?
So as I explained before, no changes in expected CapEx or OPEX. So basically, what is changing just the schedule of the project, which is starting a little bit later and ending at the end of 2025. Same OPEX and same CapEx as it was planned.
Thank you, Darius. Currently, we have no further questions. So this now concludes our earnings call. Thank you again for joining us. It's our pleasure. In case you would have any further questions, please do not hesitate to contact IR team directly. Stay safe and have a lovely day.